Look at this chart for a second. Most traders are watching this trend line on the price waiting for the breakout, but something already broke earlier and almost nobody noticed it. The signal didn't appear on the price chart. It appeared somewhere else, and once you see it, you may never look at RSI the same way again. In this video, I show you a simple RSI technique that can reveal these early signals and help you spot potential breakouts before most traders see them. So stay with me until the end. Trend lines are not only for price. When traders hear the word trend line, they usually think about the price chart. They connect the highs and lows of the candles to understand the direction of the trend. But trend lines are not only for price. You can also draw them on indicators like the RSI. The RSI also creates highs and lows just like price. Because of that, we can draw trend lines on the RSI in the same way. In an uptrend, you connect the rising lows of the RSI to draw an upward trend line. In a downtrend, you connect the falling highs of the RSI to draw a downward trend line. These lines help us see the direction of the momentum. And this is important because the RSI does not show price, it shows momentum, which is the strength behind the market move. Momentum often changes before the price clearly changes. Because of this, RSI trend lines can sometimes give us early clues about a possible shift in the market. The early warning signal. Now let's see what happens when an RSI trend line breaks. On the chart, you may notice that RSI respects a trend line for some time. The indicator touches the line and continues moving in the same direction, showing that the momentum is still strong. But eventually, the RSI may break that line. Here is the interesting part. When this break happens, the price chart may still look strong. The candles may still be moving in the same direction, and many traders may believe the trend is still healthy. However, the RSI is already showing a change. The break of the RSI trend line suggests that the momentum behind the move is starting to weaken. This does not always mean the market will reverse immediately. Instead, it acts as an early warning. After the signal appears, the price may begin to slow down, move sideways, or later break its own trend line. This is why many traders watch RSI trend line breaks carefully. They can reveal changes in market strength before the price clearly shows them. Real market examples. Now let's see how traders can actually use this signal on a real chart. In this chart, the market has been trending upward for some time. The price is making higher highs and higher lows. During this move, the RSI is also moving upward. If you connect the rising lows of the RSI, you can draw a trend line that shows the direction of the bullish momentum. Now you should pay close attention when the RSI approaches this line again. If the RSI bounces from the trend line, it suggests that buyers are still strong. But if the RSI breaks below this line, it tells us that momentum structure may be changing. This can act as an early warning. At that point, traders often become more cautious with long positions and start watching the price chart for confirmation. So far, we look at the bullish case. Now let's see how the same idea works in a bearish trend. In this chart, the market has been trending downward for some time. The price is making lower highs and lower lows. Now look at the RSI. It's also moving downward. If you connect the falling highs of the RSI, you can draw a descending trend line that represents bearish momentum. As long as the RSI continues to respect this line, sellers remain in control of the market. But eventually, the RSI breaks above this descending trend line. This break signals that bearish momentum is starting to weaken. Notice something important. Even though the RSI has already broken its trend line, the price hasn't broken its trend line yet. This early break in the RSI often acts as leading signal of a potential trend change. After this, traders often watch the price chart closely for signs of a possible bullish move, such as a higher low, a resistance break, or a change in the market direction. An important note. In both situations, the RSI trendline break does not force an immediate trade. Instead, it prepares the trader for a possible shift in the market. Combine RSI trend lines with the price chart. Now it's important to understand something very clearly. The RSI trendline strategy should not be used completely on its own. Instead, it works best when it's combined with the price chart. When you see an RSI trendline break, the next step is to study what the price is doing. Look at the overall structure of the market and ask a few simple questions. First, is the price near an important support or resistance level? If the RSI trendline breaks near a strong resistance level, it may suggest that buyers are losing strength and the market could move lower. On the other hand, if the break happens near a strong support level, it may indicate that sellers are losing control and the market could start moving higher. Second, has the trend already moved very far in one direction? If the market has been moving in the same direction for a long time, the trend may be getting exhausted. In this situation, an RSI trendline break can act as an early warning that the move is losing strength. Third, is the market starting to slow down or lose momentum? Sometimes the price begins to move more slowly, the candles become smaller, or the market starts moving sideways. These are often signs that momentum is weakening. When an RSI trendline break appears during this type of slowdown, the signal can become much more meaningful. Many traders also combine this idea with other RSI concepts such as divergence or RSI patterns, which we cover in other videos on this channel. These observations help us understand whether the RSI signal is appearing in a meaningful area of the chart instead of in the middle of a random market move. When multiple signals appear at the same time, the probability of a meaningful market move often becomes stronger. Practice and final thoughts. The best way to really understand this strategy is simple. Practice it directly on real charts. Open any chart and add the RSI indicator. Then start looking for small trends forming inside the RSI. Try drawing simple trend lines that connect the highs or the lows of the RSI. Don't worry about being perfect. The goal is not to draw the perfect line. The goal is to train your eyes to recognize how momentum behaves. After some practice, you will begin to notice something interesting. Very often, the RSI breaks its trend line slightly earlier than the price chart. And once you start seeing this happen again and again, you will understand why many experienced traders pay close attention to momentum indicators. So remember this idea. Sometimes momentum changes before price. If you found this lesson helpful, make sure to like the video and subscribe to the channel for more practical RSI trading strategies. And let me know in the comments what RSI topic would you like to learn next. Thanks for watching and I'll see you in the next video.